I think a good entrepreneur must always have that in the back of their mind, the worst case scenario. And I think a good thing that's come out of this economic crisis that the world's going through is people will focus on getting back to basics. So I think we saw 3 or 4 years ago absolutely ridiculous ideas that were being well funded, which really didn't have much substance to them, and fly-by-night sort of venture starting up. Now, I think if you can look after your cash flow, if you can focus on your basics, if you can look after your clients, if you can deliver good, solid product as efficiently as possible, you're going to survive, and I think that's going to be a good thing into the future.
George, earlier on, Elton was suggesting that, you know, in the good times, you see a lot of venture capital flows coming through to support these new innovative ideas. And certainly the figures for venture capital are a lot more positive in Africa than they are for private equity. What sectors should people be thinking about in terms of starting businesses that are part of the solution for a country like South Africa, where those ideas gain traction? You were speaking about ICT earlier on. What else?
ICT is a good sector. I think the transport sector is very good, where you've got a lot of visitors travelling to the country. Bolt onto hospitality is a very good area with the upcoming World Cup and events around the country. Outside of hospitality, I think tourism generally, going further into that, into sort of the formal sector, where you can have tours into traditional rural areas, which people from overseas will find quite interesting.
Do you want to add to that one?
I think any business that's going to be offering skills development, there'll be a great need for that into the future in South Africa.
Okay, assistance for the entrepreneur in terms of assessing their risks, putting a risk management plan into action. Is there anywhere that people can go?
I think you have to classify your risks. So typically an entrepreneur will be emotionally attached to the idea that she or he has. And it's a good idea to seek counsel up front from somebody that looks at things with a little bit more of an experienced eye. And the key risk would be the risk of market. I mean, there are many risks, as I said before, but the key risk, if there's a market for your product or your service, and that really truly does exist, and you have an advantage, a competitive advantage over the players already in that market, I think that's pretty much got rid of most of it. The rest becomes operational risk and funding risk and other things that can be taken care of. But is there a market, and are you positioned to exploit that market? If you've got that sorted out, you should be okay.
Okay, once you've sort of made that sort of assessment, in just quantifying it and refining your approach to that market assessment, it costs you money, doesn't it cost money?
It can cost money, and it can be an expensive mistake if you don't spend the money and the resources. But having said that, I think the entrepreneur themselves is probably their biggest supporter. And if you've got a bankable idea and you've got a good track record and you're committed to it, the people will offer you advice, and not necessarily for a fee. For example, you can turn to your bankers, the Chamber of Commerce, government departments like the DTI and other places where you can get advice, counsel and also funding.
Okay, we're moving heavily into the corporate governance agenda in South Africa, especially as we consolidate King 3 and the Companies Act coming to the fore. How's that going to change the landscape for risk management?
I think it'll slow down decision making. There's no question about that in my mind. And in that, again, there are opportunities for the entrepreneur who perhaps a little bit more nimble, can move a little bit faster to exploit these opportunities, but by the same token can be a frustration. If you're relying on larger companies to get your idea off the ground, it could be a frustration for you.
Your views on the changing complexion of corporate governance and the fact that we're moving away from a voluntary environment into a statutory environment, and there are just certain norms and standards you're going to have to adhere to.
I think you can't please all the people all the time, but international research and examples and experiences of other nations showing that formalised risk management ultimately brings a better product, and it enhances the reputation of the country and the companies which operate within that country. So for example, if you take the UK and the US, they have a very, very formalised approach to risk management whereby people have to get advice and consider risks. That can only ultimately improve the benefit for shareholders and the people within those businesses.
You mentioned shareholders very briefly. With the changing legislative framework for corporate governance and with the recession probably going to lead to more mergers and acquisitions, how do you plan as an entrepreneur for a changing shareholding structure within your company because you have to survive?
I think for an entrepreneur, changing shareholders is probably one of the most difficult things to deal with, either because they're diluting shares or they're taking on a business partner. I think it's far more formal and far more nerve-wracking for an entrepreneur to deal with those things. But I think, like any other business opportunity, you should approach your shareholders in the same way, or your new shareholders, which is evaluate the opportunity, evaluate the shareholder, make sure it's the right choice for you.
Financial restructuring, shareholder restructuring, a challenging element, do you think?
Absolutely. There's of course, over and above the mechanics of whether it's a good deal to do or not, there's a lot of emotion embroiled in the humanity, in the people, in the chemistry of it. Entrepreneurs commonly go through a situation where they have to restructure, change their shareholding. They were the boss, they did run the show, and now they find that they're an employee of a company that they have a minority stake. And emotionally, a lot of entrepreneurs don't deal with that very well, and that brings a whole human risk side to it, which is very often not evaluated and not thought about.
Okay, we'll continue talking about risks, human risk, political risk, shareholder risk. We're going to take a short break. When we come back, Entrepreneurial Edge, we'll be looking at the international perspective on this particular one, risk management. Stay with us. Welcome back. You're watching CNBC Africa. We're first in business worldwide. This is the Entrepreneurial Edge, and today we're discussing risk management and the role it fulfills within the broader business context. Still with me here in studio are George Nicholls, who's the CEO of Pasco, Alton Bondi, who's the founder and CEO of CIS. Gentlemen, thank you very much for staying through with us. We're going to be internationalizing this perspective on risk management. We were identifying trends and things to consider, but now the nitty-gritty of doing business on a continent like Africa. People will say to you, George, there's a perception that when you do business in Africa, you've got to factor in the corporate and business risk and the political risk as well. Your view?
Absolutely, couldn't agree with you more. And I think there are three key things when you're dealing with those matters in Africa. The first is access to information. Information is very, very difficult to obtain in Africa, particularly because it's not so computerized as the rest of the world and not so developed in terms of information sharing. Secondly is a good cultural understanding of both the region and the country going into. And a lot of the disputes we've seen or disagreements we've experienced when we've consulted the clients is based around a fundamental lack of understanding of people.
Okay, Alton, your perspective on doing business in Africa, experts will say to you, there's the legal risk, there's the infrastructure risk, there's the skills risk, and then there's the risk of political conflict and tension, and you have to consider all of these things before you decide on venturing into the rest of the continent. Are we exaggerating or being alarmist?
I don't think so. I think those risks, they apply for all countries. Obviously, they're a little bit different in Africa. The accent will be more on some risks rather than others. But my key stand as always is just don't do anything stupid that you wouldn't do at home. I've seen so many good South African businesses that because this is the opportunity to go global or go regional, forget the basics of business and make stupid decisions that they wouldn't make on their own home territory. But because it's an opportunity to go global, go regional, they start taking risks they wouldn't normally. As George says, you're in a disadvantaged situation when you go outside of your home country, not in an advantaged situation. So it is worthwhile, if you can, just to get access to information, to understand culture and things like that, to find a partner. But the bottom line is don't do anything stupid that you wouldn't do at home just because it's starry-eyed and it's international or it's regional.